Hi traders, Adam Ryan here with Optic Trading. Welcome back to another trading video. So happy that you guys can join me today. I got a really good video for you, and it's the top 5 mistakes to avoid in day trading. So these are some of the most popular things that I see a lot of day traders doing, or a lot of traders for that matter as well, short time frame traders. And if you can avoid these mistakes, you're going to be setting yourself up for a much higher likelihood of success. And not just avoid these mistakes, but what can you do instead? What is the opposite? What is the good thing to do? And that's what I'm going to share with you in this video. So number 1, operating in the market without a quantifiable edge. And this is one of the biggest things I see a lot of newer traders doing. They're trading and they have no idea if their strategy works or the setup works, or they've seen it on YouTube and they're trying it, or oh, I've seen this pattern, it works a couple times, they start using it, but they don't even understand if it actually has edge. Is it a positive expectancy strategy or setup? And that's what you really need to know, because in the heat of the battle, when the psychological errors come up and you want to pull trades, you want to do this and you want to do that, what's going to help you to hold, right? Do you even know if your strategy works? Maybe that's why you're panicking so often. Now, the brain is a fine-tuned machine, and sometimes it gets a little out of whack, but most of the time it's there to serve us. It's telling us something, right? And a lot of the time your brain is screaming that I don't feel comfortable in this. This is a garbage strategy. And a lot of these educators would say the opposite to you. Oh, my strategy's so good, it works great. It's you who's the problem. You can't control yourself. You need to work on your psychology. Well, the best psychology in the world is going to do nothing if you have no edge. You really need to understand what your edge is, when does it happen, how do you execute it, and if you don't have that down, it's going to be much, much harder for you to trade, and you might be on a losing game. You might have no edge, and it might take a couple years to realize that and blow a couple accounts, right? So let's hit right back to step 1 and understand that you have an edge. Now, how do you do that? You say, well, how do I know if I have an edge? We can make it much more simplistic than it needs to be and think that, oh, if I see this working this many times, yeah, I have an edge. But we want to avoid doing that. So what we want to do is either back test your strategy and see how many times it works, how many times it doesn't. And you can do that with back testing software, or you can just scroll back through the charts yourself, right? And see every time the strategy or every time the setup came, okay, let's see how many times did it become profitable? How many times did it fail? You know, how far did it move? What kind of environments were this stuff in? And then you can understand if you have edge. When you want to go back and scroll through the charts, what I advise doing is going back maybe 1 to 3 months, depending on how often and what time frame you're trading it. Okay, so if you are a scalper and you're taking 50 trades a day, well, you probably only need to go back a week. If you're a day trader taking 20 trades a day, maybe or 5, 10, maybe a month, right? If you're taking 1 to 3, maybe 3 months, right? You're gonna know what's right for you, but you wanna have at least like 20, 30, 40 trades that you can see happening within this setup, particularly that you're trying to find. And if you have multiple setups, you wanna look at them all and see which ones are profitable, which ones aren't, on an individual basis, and then collectively the whole strategy, and understand how many times is it working, how many times is it not. Now, I use a very simplistic approach to this. I take 100 trade sample sizes. So I like to look at 100 trades. So how often that takes me, usually it's about a month, maybe a month and a half, and I'll have 100 trades. And in that 100 trades, let's say that I'm right 60 out of 100 times. Well, I say I got a 60% expectancy. So I'm having an expected return of about 60 out of 100 trades. So that is something I can work with. Now, let's say that you get a sample size that's only 40, right? 40 out of 100. You say, oh, that's too low. That's not going to work. Well, not quite yet, you know, because you got to also factor in position sizing and reward to risk ratios. Now, you got to see what your strategies are capable of generating before you get an exit signal. Not just if you see the strategy and the market collapses forever. If you had an exit way here and the market went there, then you got to go where your exit is, right? If you have a strategy that's giving you 4, 5, 6 to 1, well, you could make 40, 35% strategy work. So just because you have a low hit rate doesn't mean that it's not going to work for you, but also you got to look into your personality. Are you going to be the trader who can sit through 7 losses in a row, 8 losses in a row, 9 losses in a row, and just be able to keep executing every single time flawlessly? If you're not, if you find that really difficult, then maybe you want to scratch that strategy and move on to something with a higher expectancy. But the first thing you guys need to do is make sure that you have edge, right? Make sure that you have a higher probability of your setup or your strategy becoming profitable than not. And once you have that tested out, then at least you have something to hang your hat on. You know, hey, I got a good strategy. Now if I mess up, it's on me, right? Because it's tested. I know that I have edge. Okay, this brings me to number 2, relying too much on indicators. Now, I don't hate indicators. I don't have anything against them. I use indicators too. I know there's a lot of great traders who do, and there's some traders who don't use them at all. But the problem that I have is that traders are using it as a crutch. There's a lot of traders coming in, 10 indicators on their chart, or they have something signal and beeping, flashing across the screen. They can't trade without it. They don't understand the fundamentals of sound trading, and they're looking to indicators to kind of be the holy grail or do something amazing that you can't do yourself with looking at price action. And yes, there's indicators that are gonna, collect the data properly and point something out to you and help you, and those are great. I use them as well. But when it comes to trading, the first things you need to understand are price action, market structure, and order flow if you are using that in day trading, right? Certain markets don't have order flow. If you're using the currencies, you can, but it's not really that accurate, but that's for another video. But those are the top 3 things that I would recommend you're doing. So if you're looking at stocks, futures, something like that, even currency futures, you're gonna wanna look at order flow, but you wanna have market structure and price action down first, okay? All these indicators are lagging in nature. They're just giving you that information. They may collectively present it to you better, so you can be like, oh, hey, this is this. Like when I'm looking at order flow, I use certain indicators that show me the flow, certain patterns that I'm looking, that if I was just watching every order by myself, it wouldn't be possible to do that. So I'm not saying indicators are bad, but before you move on to other indicators, you have to have a sound foundation, right? Like if you're gonna build a house, you're not gonna build it without a foundation. It's just gonna wobble and fall apart. Same thing with trading. You need a deep foundation that you have dig some roots in that you can build upon. And that is market structure, price action, and order flow. Once you understand those 3 things, you understand how the market works and how you can trade it, then you can build on that and add the indicators. So that's a huge mistake I see most traders doing. They're going straight to the indicators and all that, buying signal services, trying to take some kind of shortcut. There's no shortcuts. You're gonna have to do the work. So learn how to do those 3 things. You don't need to go out and buy all these courses or, get somebody to teach you. It may help a little bit, but I caution a lot of traders from doing that, because the state that we're in right now, you're watching this video, I'm sure you've seen a lot of other stuff on YouTube. It's complete garbage, right? You look on YouTube and you don't want to learn from a lot of these people because you're going to develop bad habits. They're going to teach you things that don't work at all in the market. And I've been down that path too. I've had bad education. I've spent months and months and months trying to execute somebody's strategy only to realize it's not a positive expectancy strategy and I have no possible way of making money with it. What I suggest most traders to do is get minimal education on, some chart patterns, some price action, how to read order flow, understand what the bid and the ask are, how prices move from one price to the next, get that firm foundation, and then go in the charts yourself. And this is where it's gonna take a lot of work. You're gonna have to dive in there and analyze, and this is gonna be tough, okay? This is something that I've been trading 14 years full time. This took at least a decade for me to really get good at it, right? I'm not saying it takes you a decade to get profitable, but I'm saying that this isn't like a boom, one day the lights flips and then you're really good at trading and you understand how to read these things. You keep getting better with time, but price action and market structure are the way to go. First learn that and then move on to the rest. Number 3, all right, this is a big one as well. Training, or not training for that matter. That's one of the biggest mistakes, is not training, right? And what do I mean by training? If you look at professional athletes, or you look at a doctor or a lawyer or any high performer, right? They're mostly practicing and they're doing the performance minimal time, right? So if you look at, let's say, an athlete, he's going to be in the gym, he's going to be reviewing tapes, he's going to be training in practice, whatever he's got to do, working on himself with the team environment if he's playing a team sport, and then you play the game, because that's how you get better. That's how you get the skill, right? You don't just show up to the game and all of a sudden you're good, right? Wouldn't be like, oh, I don't need practice, right? Why would I practice? Because I want to play the game. And that's what most of the traders do. They're showing up to the game, they're showing up to the markets every morning, and they haven't put in sufficient practice and training. They're not training to do what they need to do. So the big boys are just taking their money, right? It's just donating their money away, right? And what do I mean by practice? What do I mean by training? It's going to look a little differently for a lot of traders out there, but generally this is what you want to do. You want to get a platform where you can record market data or download it, and you want to trade days in the past that are real days. You want to go through, see how your strategy is executing, and try to tweak it, try to get better, try to work on pattern recognition, recognizing these patterns quicker. If I want to work on my execution, I might speed it up, because you can go at different speeds with these platforms, right? A lot of them have it. It's very common these days. You can do a quick search, but you're going to work on these things and you're going to train yourself. Wherever you find yourself weak, you can train. Technically, you can train, right? Now, when it comes to the psychological part, you're going to do different stuff, but when it comes to actually getting better and lifting the weights, so to say, or doing the practice, that's what you need to do as a trader. Now, if you start practicing and you start training as much as you start trading, you're going to start elevating your game, because you need to catch up. You're trading against traders with decades and decades of experience who eat, breathe, and sleep this, with the brightest minds and the deepest pockets. You think you're just going to show up to the market and compete? You're not, right? You need to train. Trading's the only thing that I see out there where people actually learn by doing, right? Most people learn in study, in the classroom, in practice, training, and then they go out and do. In trading, we got it backwards, and we got to change that. So I want to see traders actually training, practicing outside of market hours, and then when the market opens, you're ready to go. Number 4, trading psychology. Now, this could easily be the top one. This one's very, I wrote these out randomly as the top 5, but this is a huge one. Trading psychology. Once you know you have an edge, okay, so we don't want to talk about the people who don't have an edge and the educators are telling them they have some kind of psychological problem. Once you know you have an edge, then that's when trading psychology really matters, right? You've proved out, you got a quantifiable edge, this thing works. I'm the one getting in my own way. I need to do something to fix this. That's when trading psychology comes into play, and you really need to work on that. Now, I could do a whole video about this, but I'm just going to touch a couple of points. One of the main things I see is that traders don't understand how to think like a professional trader, because it goes against most of the things that you're going to do in life. It's not a common or easy thing to do, right? You have to switch your mindset and approach things differently, right? You also have to work on mindset. So one of the things when I say, what do I mean by changing your mindset? Well, thinking in probabilities, learning how to move from a trade by trade basis to a series of trade. So a lot of traders, they're so fearful. They need this trade to work so bad. All they're focusing on is this one trade, instead of looking at the whole strategy as a whole and saying, hey, I'm not going to just take this trade. I'm going to take the next 50 trades. And then I'm going to look at how my strategy produced over there. Because even if you have an 80% expectancy, 70% expectancy, you're still going to lose, right? You're still going to have 2, 3, 4 lost streaks that may come up, right? You still got to be prepared for that. You don't know which trade's going to win, right? And if you allow those losers to affect your next trades, then now you're taking a great strategy and you're making it worse or even unprofitable. So what you have to understand is to be able to think in probabilities and understand that, hey, I'm not going to win on every trade. I know that I do have a positive expectancy, and I'm going to go that way. Now, there's much more things to look into within when it comes to fear, greed, FOMO, a lot of these problems. And there's specific strategies to overcome each one of these. If you'd like to hear that, maybe leave a comment down below and I'll make videos that go a deep dive into each of them. But when it boils down to is confidence, right? And a lot of people don't understand how simple this can actually be, because it takes so many years and experience. But when you become confident in yourself, when you've seen your strategy, when you've seen your system hundreds of times, you've just seen it, you know exactly this pattern. Okay, this is what happens. Sometimes I will just boom, click the buy right away when I see a pattern, instinctively, before I have a chance to think about it, because it's already wired in me, right? I've seen it so many times and I'm comfortable. I can sit through a pullback. I can allow the market to go against me because I know my expectancy. I've seen this strategy so many times, and I've worked extensively on trading psychology, on helping myself. And I found that a lot of things can boost me up, help me there. But the biggest thing was the confidence. The biggest thing after all the hacks, all the tips, was just seeing my strategy over and over, day in, day out. And that allowed me to hold. That allowed me to be like, okay, I've seen this so many times. I know that, hey, we might pull back, but it's likely that the buyers are gonna come back in and test this. If they don't, this is what I'm gonna do on the downside, right? And you know how to attack it, right? The second thing when it comes to trading psychology is that traders are not accepting the risk. They're wild out there. They're not understanding what they're risking, right? And being, am I okay with that, right? Am I okay if I take a $500 loss here, $1,000 loss, $200 loss, whatever it is? Is this a big proportion to my account? Because you're gonna be trading scared all the time. If you're not able to accept the risk, understand what that is. It's in an acceptable level for you that you can be calm and trading carefree, because if you can't access that carefree state of mind, you're never going to be able to get it. You're not going to be able to trade profitably. So understanding the risk and thinking like a professional trader, those kind of are the two biggest things I would say, mindset trading psychology wise. And of course, like I listed before, there's fear, there's FOMO, there's all these, you know, little things that happen within the trading psychology space, but those would need a separate video in and of themselves. So if you guys want to see something like that made, just leave a comment below and I'll be sure to get that out for you guys. This brings me to my final and last, number 5, the top mistakes that I'm seeing traders make and what you need to avoid as a new day trader is persistence, right? It's giving up too easy, right? Most traders are giving up so easy. Now I see that you always see the stats, 90% fail or whatever. And I wonder if that would be the case if people didn't give up right away. Because most of these stats, people have blown their accounts in 6 months, a year, they're out of the game. They don't come back, right? They don't talk about the traders who've been at it year in, year out, who've actually made something work, right? They look at these studies from brokerage accounts of retail brokerage, right? So they're not looking at pros. They're looking at retail people who don't even know what they're doing and they're following signals. They're looking at YouTube. Of course, they're going to be failures, right? So I don't consider that an accurate representation. And the reason why I think most traders quit so soon is because you've been fooled. You've watched countless YouTube videos. You've seen the garbage that's out there. Hey, I made 10,000 a day. I made 2,000 a day. Oh, 10 minutes of work. Learn how to trade in 2 days. All that garbage, right? That's not realistic. That's not what trading's about. Trading is hard work. And the reason a lot of people give up is because they get into trading thinking it's going to be so simple. Oh, look at this guy, right? He's trading on the beach with his laptop and now he's making this much money. And they think, oh, maybe I'm just slow. Maybe I just can't get it. Maybe it's me. It's not you. They are not showing real trading. They're not real. Okay, this is fake. So you got to understand that. Don't give up. You absolutely can do it. It takes persistence and dedication and discipline. You can attain that. You can maybe say, I'm not a disciplined, I wasn't a disciplined person either, right? These are things that you can work for. And if you really want it, you can achieve it. There's nothing that can stop you from getting it, but you're giving up too soon. Most of the traders out there, they're quitting way too soon. And that's what I don't want to see. I want to see traders continue to push it, continue to grind, and understand that what you're seeing on YouTube is not an accurate representation of what trading actually is, okay? And get your mind back into reality and know that, hey, anything great worth having takes work. There's nothing where we just show up and we make thousands of dollars and we do nothing, right? That's not life. It's not trading either. Now, I hope in this video that I showed you something, or maybe you had an aha moment, or I helped you out in any possible way. If I did, be sure to give me the thumbs up. Subscribe to the channel if you want more of these videos. Best of luck with your trading, and I'll see you in the next video.